Morning, everybody, and welcome to this, our first Masters Series event for 2023, and an early morning delve into the economic rooms. I'm Stephen Wilkinson. I'm chair of the Masters Series Working Group. The Masters Series events are exclusive to you, our members, and are provided to you and to all of us as a benefit of membership. This morning's event is a presentation and question and answer session, which will be hosted by our master, Nick Dunlop. The event is being recorded, so please contact the clerk afterwards if you want access to the recordings for your own use. Can you please make sure your microphones are muted just to prevent any background interference during the event? We're scheduled to last for an hour and 15 minutes and we aim to finish promptly at 10 a.m. But this is your opportunity to ask questions, to find out more. So please put your questions in the chat box throughout the session. We'll do our best to answer as many as possible in the time we've got allocated to it. We'll see if we can cover as much as possible. So it's now my great pleasure to hand over to our master, Nick Dunlop, for the introduction and the session. Thank you, Nick.
Thank you. Well, good morning, everybody. It's great to see you all, and welcome to this first Masters Series session of 2023. Our speaker today is Rain Newton-Smith, who is the Chief Economist of the CBI. I'm going to read an intro to Rain, which is, I have to say, is pretty impressive stuff. Rain leads the CBI's economics and international teams, focusing on economic and tax policy, the transition to a low-carbon, sustainable economy, and global business leadership. She and her team provide business leaders with advice on the UK economic outlook and global risks. Previously, Rain was head of emerging markets at Oxford Economics, where she managed a team of economists and was the lead expert on China. She provided macroeconomic forecasts and analysis on China's role in the global economy and the development of Asia, helping a range of companies and international financial institutions to expand into new markets. Prior to that, Rain worked on the international forecast for the Monetary Policy Committee at the Bank of England and led a team with responsibility for developing a risk assessment framework for the UK financial system. She's been seconded to the IMF in Washington. She is actually still a World Economic Forum Young Global Leader and a member of the Global Future Council on Monetary and Fiscal Policy. And she's an independent NED at the F&C Investment Trust. Rain, welcome. Hello, thank you very much indeed. And that's a long intro, but I think your credentials for reading the runes on this are extraordinary. So everybody, what we agreed that we would do is probably have a little conversation between us to start off with. I'll ask some questions, and then we will then open up to the floor and expand the conversation. And I'm going to ask for apologies because I'm using an iPad, and if my finger gets in the way every now and again to read questions, then I'm sorry for that. So, Rain, I guess the first question, we're off the back of Davos. We've seen lots of discussion around what happened in Davos. And there are some interesting comments being made that perhaps things aren't as bad as we thought they were originally set out to be. And a little bit of contradiction in there. China has said we're open for business and they're looking for growth post-COVID lockdowns. And there's been this huge investment in the United States through the Inflation Reduction Act. And the EU is sort of thinking about avoiding recession. So are things as bad as we think they are or not? And obviously the CBI have made some comments about the UK being stuck in a rut. So what are your views on all of this?
Well, thanks so much, Nick. And before I dive into some of that view, get my crystal ball out and think what the world economy is looking like, and particularly how the UK is positioned in that. Just to add the bits that you couldn't say on the CV, which maybe grounded me a bit more. Yes, I'm still technically a young global leader at the World Economic Forum, because it has this sort of funny thing. Once you are nominated a young global leader, no matter how old you get, you remain a young global leader. So I am very much looking forward to going to the World Economic Forum in my 80s as a young global leader. Let's hope I make it. And I should also say I was working on financial stability when Northern Rock went under at the Bank of England. So maybe that, puts everything in perspective. We can maybe come on to that later. But look, I think in terms of the global outlook, you're absolutely right. I think whether you were at Davos or just some of the commentary at the start of the year, it really feels quite divided into glass half full or glass half empty, that there's a sort of split between actually things are getting better and the worst is behind us, or is the world still fragile? And I think there are definitely some big risks that still loom out there. But I think I think what is becoming more clear, and I think where I fit in to the overall look, is that I do think if we look at just in terms of growth terms, yes, if you look at kind of calendar year growth, this year will be weaker than last year across the world as a whole. But I think in some ways, some of the sharpness of the shocks that we've been facing, some of the acuteness of that is behind us. If you think about, the squeeze on energy prices and what that's done to inflation and the cost of living crisis, we're already seeing gas prices are a lot lower now. They're about half the level expected as what they were expected back in the autumn. And, we've also seen inflation peak. And I think, so I think, there's definitely reasons, I suppose, for optimism. And I think what we're all hoping is that this recession will be as short and shallow as possible, both in the UK, but that global slowing of growth. And I think some of that, some of the reasons for optimism is definitely about China reopening. I think, even back in, even a couple of months ago, we couldn't quite envisage how China was going to end its zero COVID policy. We do have a small office in China, and I have to say, talking to Guy, our director there, as you can imagine, there's such mixed emotions in China at the moment. On the one hand, the economy is reopening. People are really, pleased to be able to start to, end some of those restrictions that have just really been so challenging for the economy and for everything over the past few years. And yet at the same time, so most sort of healthy adults now have had COVID in China. But of course, the challenge is, older people and those who don't have enough vaccines, the hospitals have been overwhelmed, and it is, we only need to reflect what it was like here. So it's a really mixed emotions. But I think China reopening and that having happened is positive for the overall world economy and will help to stimulate growth. And I think in some ways the question is, will it add to some of the inflationary pressures that we're seeing globally? Second, I think the second factor where are sort of reasons to be cheerful, and why I think the glass is half full, is definitely whether it's partly through luck, and it doesn't feel right as we're sort of struggling with -6 outside at the moment. It feels very frosty, but generally it has been a very mild winter in Europe. And I think Europe was also really successful in building up gas storage. And also in Europe in particular, they've had a big drive around energy efficiency. And that means that some of the concerns about how Europe would weather the winter with the war in Ukraine and the pressure on oil and gas prices, I think is now behind us. So that means while we may well see a recession in Europe, it should hopefully be relatively mild. And I think some of the concerns around how long gas prices would stay so extraordinarily high have now eased. And then I think the third sort of reasons to be cheerful is that despite, and obviously we've seen some high profile announcements on job losses in some of the tech businesses and some of the financial services, actually unemployment across advanced economies is staying very low, still unemployment rates almost, at historic lows here in the UK. And I think that is really important, because in previous recessions, it's actually generally high unemployment that starts to really drive that long-term slowing in the economy, and means that recessions tend to last. But why, should we be pessimistic? Well, I think still the big challenges are, we're absolutely not doing enough at the speed and scale we need to tackle climate change or address biodiversity loss. And if you look at the World Economic Forum's global risk register, or their global risk report, you can see that, over 50% of both the near term and even the long term risks to the world economy stem from climate change adaptation, biodiversity loss. They're either climate or nature related. And the sort of number one risk in the short term, yes, is around the cost of living crisis. But the number two list is about extreme weather events. We only have to think, and this isn't, I think what we've started to realize is this isn't just a problem for developing countries, for people, living around the equator, and some of the extremes in temperature we saw here in the UK. And actually we start to see not just the impact on weather, but also the impact on our economy. And that is the sort of number two risk. So I think there's, I know Nick will sort of pivot to thinking about what are the opportunities, but hopefully that gives you a sense of where the kind of big global picture. And I suppose the other thing I would say in terms of challenges and what people are thinking about is still this theme about deglobalization, diversifying supply chains. Of course, we saw the really dramatic diversification away from Russia, understandably, as we saw war in Europe over the course of last year, but thinking about countries' exposure to China, though I do think the reopening of China means we'll probably see less of this kind of tensions we've seen between the US and China, Taiwan, etc. But I think the other thing, of course, we're all watching is, what is the end game with Russia and the situation in Ukraine.
Thanks, Rain. I mean, you touch on a lot of stuff there. I mean, I think let's talk a little bit about the impact of these shocks. And there's been a lot of discussion around, have we've had a lot of rhetoric and a lot of impetus and a lot of numbers waved at us around the transition to a green economy. Then these shocks come along, and quite rightly, we focus on, well, we've got a secure energy supply, which of course is what we've got right now. But do you think that they've not terminally damaged, but it's like being attached to a sort of giant, when you're in a stressy situation, you go to what you can touch first and get to first in terms of supply. But do you think it's actually in some way, shape or form diminished our focus on a green transition? Do you think, we need more gas, so we'll have that. We'll need more coal, so we'll have that. We've just agreed to open up a new coal mine. Do you think that it's diminished the value of the green transition in the eyes of those who run the place? And do you think that we're doing enough in that to support the transition?
Yeah, I mean, look, there's so much in that question, Nick. Maybe I can just start at a sort of higher level, and I guess how kind of businesses are feeling, and then we can maybe follow on and think about, where are the opportunities for the UK? Where can we create some of those green markets? But I think it's a few things. I think, look, so I think people have woken up to a few things. First of all, that however we do this transition, the transition to a low carbon economy is going to be, I think, more challenging than maybe people realize, and also that we are going to see more volatile energy prices. That's partly, war aside. Obviously, the very recent volatility in prices was caused by the devastating war in the Ukraine. But I think we just, economists certainly have woken up to the fact that this will be disruptive. It will be more inflationary, I think, than we had, maybe predicted or thought about, say 5 years ago. I think the second thing is the lens in which people are talking about is now not just about the transition, but also about energy security. And certainly, if you're talking to governments, etc., making, the case for investments, it has to partly, be couched in energy security. Now, the mood in amongst businesses, the CBI obviously have members across sectors, across size of businesses, is that generally they said this is the moment that the UK needs to use this opportunity to accelerate our investment in renewable energy. We need to be accelerating as well our investment in energy efficiency. And I think actually some of that Europe's done quite well in trying to have energy efficiency targets in heat and homes. And we've only, more recently saw the UK start to step up its game. But we need to think about energy supply, but we also need to think about energy demand. And now is the moment to do that. And of course, the change, it has changed the return on investment. You can see that talking to businesses, even smaller businesses, about the return on investment in solar panels. If you can find someone to install solar panels, it's a very good investment. If you have, local, if you are a relatively high energy intensive user in a shop, etc. Though of course, actually the supply chains are the things that are holding people back at the moment. So it has changed, some of the calculus, but I also think, for the transition to really take hold, we need to think about how we create green markets across different technologies, and we can maybe come on to discuss how we do that. And I'd also say, obviously, insurance and de-risking some of those technologies really lies at the heart of that transition as well.
I mean, we speak a lot to clients who actually, in the real economy, people who make things, people who build stuff. I think it seems that the impact of the transition is now really dawning on them. They've now got to do something. They've got to learn how to. Could we go on mute, please? That would be very kind. Thank you. Thanks. The impact of the transition is now really coming upon them, and they need tools and they need help and they need investment to work out how to most optimally work their way through this. One of the tools that everybody is really talking about right now, of course, is across the other side of the Atlantic, which is the rather interestingly named Inflation Reduction Act, which the Americans have brought in, which is stimulating an enormous amount of investment in green and transition. And I wondered, as a sort of mechanism, it seems everybody is saying this is the right way to do things. And how do you view that compared with what we're doing in this country?
Well, look, I think, I'd start by almost answering the end of that by saying that we need to use all the tools at our disposal. The transition. And then I think we've got someone off mute.
Yeah, could we all go on mute, please? Thank you.
But yeah, we need to use all the tools at our disposal to make this transition across all countries. But you're absolutely right. What the US has done with the Inflation Reduction Act has been a real game changer. And I guess to almost put it in context from a UK point of view, I think why it's really kind of woken people up or made us realize this, this is a competitive game, right? We all need to decarbonize our economy. Those who, if we can help to develop some of the technologies here and implement them, and some of the advisory technologies here in the UK, then there's a global prize to be had in terms of realizing that opportunity. And I think if we step back and think where the UK has been on this, we were the global leaders on climate. We have probably the best in class climate governance here with the UK Committee on Climate Change, the work that Nick Stern did on, which led to that in terms of how to set carbon budgets for an economy. And we've been the most successful G7 country at decarbonizing our energy use. We've halved our emissions from 1990 levels already. We were one of the first countries to adopt a net zero target. But I think what everyone realizes is, in the UK, there's a huge amount of investment, both public and private. We need to make that transition. You know, the UK Committee on Climate Change estimates that for the UK that we need to see about £50 billion of investment per year over the next decade to make the transition. And now we see the US entering, you know, I would say quite late to the game, around making some big plays about public investment, trying to unlock some of that private sector investment. Now, we could probably argue, there's no doubt that some of the US Inflation Reduction Act is a protectionist move. There's definitely some, you know, trying to look at global supply chains, but essentially what they've committed to is, you know, people estimate around at least $500 billion to invest over the next decade in a range of essentially climate subsidies. You know, some estimates is it runs as high as $1 trillion, and they're looking at electric vehicles, consumer tax credit. So, you know, a credit to buy an EV, but that EV has to have a certain amount of content that's produced in North America. So that's where the sort of protectionist element comes into it. So, you know, there's a criteria around how much of the battery, etc., is sourced in the US. You know, they've also got tax credits on manufacturing to invest in clean energy and clean technologies, and also tax rebates for households when they make their homes more energy efficient or install solar, wind, or you know, heat pumps. So I think the scale of it has really woken countries up, and I think, you know, we'd argue the UK really needs to think about, we probably can't spend at the scale that the US is doing, but what we can do is think about how we unlock these green markets. How can we do things like we did with solar and offshore wind, where we develop these contracts for difference, essentially a way of risk sharing with the government, so you can crowd in some of that private sector investment into riskier technologies. And of course, it's not just about the US. Europe is pursuing a Green Deal, again, probably not quite on the scale of the US. And I think Europe probably has too purist an approach on the green taxonomy, what they define as a green investment. So again, the UK has an opportunity to be that middle ground, to have a more flexible approach on regulation and recapture that leadership on climate and climate investment.
What do you think? Obviously, you know, there's been quite a notable failure of late. So the British Volt gigafactory collapse. What do you think that's going to teach us? Do you think that's going to change the way that we go about looking at these things?
Well, I think there's a few things, and I would say, as a country and as a government, and you know, we need to be more ambitious and set out that vision and strategy for the UK, a plan for growth, but also, you know, where the markets really want to lead the world, and set that vision out. It does feel, understandably in a way, because we're facing this cost of living crisis, that actually our policies are a bit too inward, and we're forgetting about that sort of international competition piece. And I think, you know, you can look, there's clearly a series of mistakes that were made around British Volt, but I think what is the answer to it, a couple of things. One, we need that landscape for business investment. And, you know, we're seeing a big increase in corporation tax in the UK in April by 6 percentage points. If you're going to do that, then you need to have you know, really strong capital allowances, so that you're saying, if you know, essentially business, you won't pay as much tax if you are investing here in the UK. We know the Prime Minister would like to do that. We think he can be more ambitious on it. But they, you know, it's again, it comes back to the sort of fiscal dynamics. But if you can get, you know, we've done work which shows if you can get that investment going, if you had a permanent capital allowance, that would drive investment around £40 billion per year. So that's almost getting to that climate gap just through a tax lever. So I think there's things we can do on that landscape. And I do think, you know, thinking about what are some of the critical technologies, and battery manufacturing for electric vehicles is one of them. So setting up, you know, gigafactories, making a couple of big bets with public investment, and then having, you know, risk sharing models on sustainable aviation fuels, on hydrogen, and setting up filling in some of the policy detail that have, the UK Committee on Climate Change have been doing. And I think, the government, if you think previously they've made stride, we've set clear targets around electricity generation from solar, et cetera, but we haven't done the next layer of detail on how we will deliver that.
Do you think we're sort of, your comments are interesting, because what comes across to me is that, hey, we're not quite as bad as we might think we are, and we're perhaps being a little harsh on ourselves in comparison with others. I mean, do you think that's fair?
Yeah, absolutely. I mean, I think there's a couple of things, behind it. I do think it's partly the British psychology. I also think, there is, if you look at some of these surveys of global CEOs, the perception outside of the UK is much more positive than the perception inside. And some of that is, look, we are inflation, some of the global shocks are, for a variety of reasons, are a bit more acute in the UK at the moment. So our inflation's a bit higher. We're obviously, many countries are dealing with labor disputes and and the challenges of the cost of living and how that's impacting on public services, but it does feel more acute in the UK. And, and if I'm being challenging, I also think in the UK, I'm a big believer in stories and narratives are important and become self-fulfilling. And I think my observation over the summer is and this is not to denigrate, I do think the cost of living is really challenging for low-income households. So if you're in the bottom 20% of our society, and this stuff matters, like we should care about this, it's really important that we do. This is really acute. But I think sometimes our narrative around the media became exclusively about the cost of living crisis, and then we don't give enough attention to some of the opportunities, some of the things that are really working in the UK, our universities, our technologies. We are developing some of the most amazing businesses and technologies here in the UK, but sometimes we don't talk about it enough. And so the focus becomes on some of the real challenges and not thinking about some of the areas where we really still are leading the world. And climate is one of them.
I mean, that's a great comment. It's great to hear. But we've had a question. I'm going to touch on this because Sarah Varden's put a question in, which is, I think, relevant to this discussion, because it gets into the real heart of the economy, which is, what is the interest from SME businesses in the move to net zero, and are they embracing it as an opportunity? That's that, and I'd add to that. And then, what do you think the real world frustrations are that they're experiencing if they want to do something about it?
Yeah, so I think it's a really good question. And I would say, look, some absolutely are. Some have been created by, the green opportunities and our, renewable energy firms, etc. But I would say that was the one thing, going back to one of your earlier questions, where, what's changed since in the energy crisis around the transition. And I think what we've seen is, I think for SMEs, it's made things so much harder, right? I think I haven't seen a change in appetite really from medium-sized businesses and up about the need for the energy transition, for the policies, that should be the focus of the CBI, et cetera, apart from SMEs are just saying, look, we're just facing too many challenges. The cost is too high. I don't have time to do this. I get you that, I should be investing for the long term and thinking about how I make my business more energy efficient. But right now, I just need to figure out how I pay my energy bill for this year. So I do think it has become more challenging for SMEs. But I think what is helping, right, is whether it's through financial regulation, whether it's through the sense from financial and business and professional services and that wider and larger businesses, they all now have net zero targets. They know what their obligations are, and there's a real commitment to helping businesses in their supply chain through that. And there's now a range of tools to help smaller businesses, but I think it gets into the nuttier thing that none of this is easy. There are trade-offs. It is costly. Yes, there are returns over the long term, but you need to have the access to finance. and the know-how to do this in the short term. So, you know, I think it is harder for smaller businesses, and we all have to think how we help them through this transition.
And before I get onto the subject of where we all fit into this in the insurance industry, I mean, when you ratchet this up a notch into sort of the larger corporates, those with a global footprint, etc. I mean, what are the frustrations that those organizations are now experiencing? I mean, we know because we help a lot of people in this space, but lack of data, lack of uniform ways of measuring things. There's a number of these, but I mean, what are your views on this?
Yeah, so look, I think there's so, you know, many things that you know, need to happen. I mean, one, you know, we do need to improve the overall measurement of carbon emissions, but also have, you know, the more we can sort of standardize some of those measurements and the way that businesses are looking at this. I do think the work that's been done around transition plans is really important, because a lot, I guess, from, you know, if you step back and think about like the task force around climate related disclosure, you know, it was very much focused around the risks, and that was it has been so powerful, right? And I think it's really shown, you know, obviously in your industry and the skill set of just understanding risks, and people should be thinking about this as that risk of opportunity was really important. And then you've seen the work around disclosures. You know, what are my emissions in my company, my financed emissions at the moment, and that snapshot of now. But and we know we need to get to net zero, but of course what matters is how we move from where we are now to that net zero, and that is where the transition plan comes into play. And I think bigger businesses and all, you know, really needing to look at, where are my emissions now, what are my 5-year targets, what are my interim targets, and how will I reach that, and thinking that through is, you know, is really important and is really powerful. And I suppose the other thing we haven't touched on, but I think it is even more complex, but you know, arguably as important, if not more important, is also thinking about nature and biodiversity loss, right? These extreme weather events accelerate nature loss, and you know, that means the exposures to risk within the food chain, etc., and beyond. I think people are starting to wake up that is something, you know, measuring a unit of carbon is a unit of carbon. A unit of biodiversity is not, you know, it depends where it is, depends what species we're talking about, is much harder to measure, and a bigger challenge.
Thank you. I mean, let's look a little bit now at our role as insurers, as people in the insurance business. I mean, let's focus, I think, dominantly today on the taking the risk side of the story rather than the investing side of the story. Although anybody might want to ask some questions on that. But, you know, obviously we're now seeing new risks. You've spoken about the need for innovation. You've spoken about the need for finance, and finance is underpinned by some de-risking strategies, and we are historically, you know, the place to go. How do you see our role now in as we see these rather extraordinary risks coming down the track? Not only new risks, but also the risks that we're quite familiar with turning into much bigger, more frequent events as well. There's a lot of challenge out there as well as a lot of opportunity. How do you see the role of insurance now as we think about this transition and where the economy is right now, and how people need supporting?
Yeah, so I mean, obviously there is, well, a couple of things. One, you know, if you think about global opportunities, you know, this sort of trade and services, or our ability to provide insurance, financial services, sustainability advice globally is a real opportunity for the UK. It's where we've led historically, and can certainly help in future. And the role of insurance in terms of pooling risks and how you then mitigate them is so important. So clearly a huge role around, you know, climate adaptation, whether that's in the UK or globally, and that creation of markets that way. But even if you then flip it round and think, okay, well, in the UK, what do we need to decarbonize, right? If you think about our share of emissions, you've essentially got, in sort of ascending order in terms of, but, you've got transport, energy, business, and then residential, which is essentially heat. And all of those, there's a role for insurance, right? If you think about transport, the switch to EVs will generally happen. Like, more controversial, but I don't think it's not an area where here in the UK, we need to see massive subsidies. We need to think about, where our charging points are, some of the infrastructure, but there isn't a big subsidy element. But on things like shipping and aviation and heavy goods vehicles and trains, for some of those, we need technologies that aren't economically viable yet. So sustainable aviation fuels, there are fuels out there, but they're 5 times as expensive as current fuels. So it's also not clear which technology will win in those sectors. And so that brings risk. And that's where insurance comes in terms of how can you create essentially models where you're co-sharing some of that risk, with the government or with other private players to try and help develop some of those technologies. And there's, same thing on energy, small nuclear reactors and other things. There are ways in which we can create contract for difference and others to really increase the take up of some of these technologies. But for that to really happen, you've got to have insurance in place. And I guess finally, if you think about heat in homes, we know we need to do a lot of retrofitting in homes in the UK. What's the first step you need to do before you do a retrofit is make sure you have buildings insurance in place, right? So it's almost across every sector and every market that we need to create. There's a huge role for insurance. And I think also that skills and expertise that we need to see across different businesses as well.
Yeah, thank you. And I think that obviously the other point is that the data and the way that we actually run our own businesses, calculate our own risks, and model our own exposures is of course now becoming something that's quite useful to the real economy as they're being asked to do those things for their own account, and they don't have the skills and resources to do that. So I think there's quite an opportunity there for us to step up. Probably a good idea, Rain, if we open the discussion to the floor, and we've got some questions that have come in on the chat. The first one is this is stepping off to the side, but hits to your point earlier on about globalization. But it talks about it's this, and we all hope for the best in terms of the West relationship with China, but there are major risks. The opinion on strengthening the United Front work of the private economy in the new era issued by the General Office of the Central Committee of the Chinese Communist Party in September 21 sets out an agenda for the CCP control of the private sector, including foreign businesses, and threats to Taiwan are escalating. So how should businesses contingency plan for these risks while seeking to benefit from the growth in China and the importance of its place in the global supply chains? Many of these things seem to put them in the too hard tray and ignore them.
Yeah, look, it's a fair comment. I guess, I mean, there's many things in that question, and I'll maybe just make a few observations. I think one observation is partly, if you think about the World Economic Forum, and that is a sort of symbol of what was interesting about it is actually there was a huge Chinese delegation, I think one of the largest they've ever had. So I think the idea that China is engaging with the world, it isn't retreating. There was a feeling it might, China might really retreat, but it is engaging, but I would say it is in a challenging way. So I think there's a few things. If, China over the last few years has been putting more and more restrictions that make it harder and harder for foreign businesses to operate in China. So you have that challenge. There's been a huge sort of anti-corruption drive, which is, some in another lens has been quite a protectionist drive as well. Protectionism maybe by another name. And then on the other hand, you also have all the challenges around human rights in China, the persecution of the Uyghur people in in the northwest of the country. And so businesses are asking, need to ask themselves really fundamental questions about where their supply is coming from and what human rights abuses might be happening. So you take that together, and it means that, I think any business operating in China has to have its eyes wide open for the risks. You really need to know where your business is located, because that's important. And then I think what we are seeing in terms of how businesses are reacting to it is a few things. I think companies, look, we can't have the same approach in Russia as we like. We can't do the same thing we did with Russia with China, right? Our exposure to China is just way bigger. We didn't have many direct exposures to Russia, so so companies could pull out or sell their Russian operations relatively quickly, almost overnight. But we can't pull out of China in the same. It's just too integrated into the global economy. So businesses are thinking about a China plus one. When I'm expanding, what other markets in Asia should I be thinking about from our supply? So not just pulling out overnight, but how can I diversify where my supply is coming from? And I think as in any location, right, businesses really need to be asking themselves, do they know enough about their investments? But the challenging thing is, at the same time, there are opportunities in China. It's a huge market. It's a growing market. It's a complicated market. It's actually, a country of lots of different cities, each of whom have a lot of autonomy. So, I always think actually now, the biggest analogy is with the US, right? It's the same, large geographical mass with lots of different provinces and state level and city level strategies on how businesses is run. So I think one of the dangers, we think about China as being this amorphous mass, which it's not.
Yeah, and there was that really interesting article, it's a big piece in the paper a week or so ago about Apple, which is literally inextricably linked with China, and an extraordinary story of how they were trying to disengage but actually can't. And I thought that was a really interesting piece. We've had a question from Ben Blackman, who says, with Eastern countries becoming more powerful and the potential end of the petrodollar agreement coming, do you see the world moving away from using the US dollar as a reserve currency? And what impact might this have on the Western world? That is a big question.
Big question, but I'm going to go with a simple no. I think the US dollar has supremacy. There were times when, and it's not to say, look, the euro, obviously, if you step back the last 2 decades, the euro has emerged as a reserve currency. It is also now a very important reserve currency. But, I think actually what we've seen is the US dollar has almost become more important, right? And that's been proven through recent crises. That's not to say that globally, if we're thinking about where our regions emerging, there's, the Middle East is definitely, and actually, I wasn't there this time, but I've heard from people who were there, you saw a real difference. The tech firms were less present, but some of the larger petrochemical firms from the Middle East, and I'm not, and wider Middle Eastern businesses were there because there's been a lot of wealth and opportunity in the region. So I think, if companies are thinking about their own strategy, they should be thinking about where is that growing demand in the Middle East, and also Africa. Like, we need to be thinking globally in terms of our where markets are developing. But I don't think I think people who bet against the demise of the dollar have been stung quite hard over the last few decades.
I mean, the Africa situation is very interesting also, because stories recently of the Americans having a huge, almost sales push in Africa to explain how they're going to invest, how they're going to replace, or how they can compete with Russian investment and start to win not only the investment war, but also the hearts and minds. I mean, how do you see that story playing out?
You mean in sort of investment in Africa and?
Yeah, I mean, we've had significant Chinese investment, we've had significant Russian investment. And do you think we're cutting back overseas investment? I mean, the Americans now seem to be in Africa, sort of making very positive noises to people for some interesting reasons. But what's your view on that strategy?
So I think there's a danger, though. The flip side of that is an opportunity, right? That there's a danger that we're not being, I think, internationally strategic enough around our place in the world and thinking about, industrial strategy has come, but we almost need like a proper international industrial strategy. And you can see that is what China has pursued, right? They've gone out and said, where are the markets of the future? Where do we need, everyone's making a transition to electric vehicles. Where are the materials from electric vehicles? Where does that come from? Where does it come from globally? How can I make sure that I have security of supply of some of the critical minerals I need, either domestically or internationally, and then kind of pursue that. And we may not be able to compete at that level, but we should be thinking about where, just putting more thought into economic resilience. Where are some of the, what are some of the things that are critical to our supply chains, and where do they come from? I guess I might segue from that into some of this wider growth strategy for the UK, because I can see there's been quite a few questions.
Yeah, exactly.
So I think, look, the first bit of that is, I'd start with that international phase. We have such strong international diplomacy. We are seen as a leader in international development. We should use that more and, be proud of our global position. So I do think these things matter, and having that a much bigger strategy for growth, but also growth internationally, and making the most of our trade and services. That's where the growth in trade will be globally over the next decade. We're the second largest exporter of services globally. We should make more of our comparative advantage. But for that to happen internationally, we also need to think domestically around our policy. So one, on business investment, it is true, our corporation tax is going up. It does mean that if you look at our incentives for investment, we drop from being, as a super deduction as well comes to an end, we drop from being kind of number 5 in the world to 30. We need to look at that. There are ways that we can improve our capital allowances. We also need to think about skills, right? And that's about investing in skills, but also helping people live and work longer. There's a big rise in inactivity in the UK. It's not just in the UK, it's happened in a lot of advanced economies since the pandemic. So thinking about how we can have a more flexible approach to bringing people and keeping people in the workplace is really important for our long-term productivity. And finally, thinking about the creation of green markets that I've been talking about. There's lots of things we could do tomorrow to kind of put our position and be proud of that as a global strategy.
There was a question earlier on, you've used the word strategy quite a lot, and that there isn't a strategy, that actually that we're rather kind of tactical at the moment, to put it nicely. I mean, do you think that's unfair, or do you think that's true, that people are too busy being concerned about what's going to be on the front page of the Daily Mail maybe tomorrow, rather than actually genuinely thinking about strategy? Are we in some sort of paralysis at the moment for obvious reasons?
I think we need to be more ambitious on the vision. And I say this, look, with immense respect for politicians on both sides of the spectrum. And I think if you look at, I guess what would be my hope, if you look at how Rishi Sunak was a chancellor and what he did during the pandemic, he was incredibly bold. He, and we obviously worked closely with him and the trade unions and UK finance and the insurance industry to help create the furlough scheme, the bank lending schemes. I mean, that's not to say, look, I mean, those policies did really work. You could I look back and think maybe, we could have reduced the generosity faster, etc. But they definitely helped our economy through that, and Rishi Sunak was prepared to be very bold. But I think we're not seeing that same boldness and focus on delivery too in the premiership. And I think for me, it's encapsulated by the sort of 5 pledges, right? They lack, I guess, you know, they're important, but they lack ambition. We know our economy will be growing by the end of this year unless, you know, we're hit by more economic shocks. Inflation will halve by, you know, and I mean, on a personal level, this is my personal view, I think the focus, you know, obviously we need to reduce waiting lists in the NHS. That's hugely important. The intertwine between health and our economy, everyone has woken up to. But, you know, I think the 5th pledge was also about small boats, and that feels quite small-minded to my point of view, because we need to think about much more broadly. There's policies around immigration, there's policies around refugees, and the two are very different. And I think it's dangerous when we conflate the two. And personally, I think there's more we can do to use our international power to be welcoming to refugees, to help them find work in the UK. They make a huge contribution to our economy. And, you know, rather than just focusing on some of the challenges, you know, we need to make it easier for people to find routes to come here as legitimate asylum seekers. And I just think it's going down an issue that I don't think the ordinary people care that much about, whereas we could be lifting things and setting out that vision for the UK. But at the same time, it's a really challenging time to lead, right? We're emerging from a really difficult time in politics, you know, and so that focus on economic stability, yes, has to be first and foremost, but I think we could be more ambitious on that growth strategy and the vision for the economy.
Because Malcolm makes a great point here, but I think you touched upon the sort of competitiveness of the country. But he asked the question: why should foreign companies invest in the UK and seek to create jobs here? I mean, there's a soup of negativity which you've highlighted, and then there's some very positive things. But what's the challenge? How do we sort of help people? What's the song say? Accentuate the positives, eliminate the negatives, and how do we deal with that issue and get foreign investment in the country at the moment?
I mean, I think we've got some of the most amazing businesses and technologies and talent, right, from around the world that are here in the UK and have created and grown some amazing businesses. I mean, I think, you know, just look at the COVID vaccine that was developed just a few miles away from where I am, in a brilliant public-private partnership between a university, a research institute, and one of the world's leading pharmaceutical firms, right? And that, you know, we have the ability to lead in the broader financial and business and professional services. We lead the world in life sciences. We lead the world in so many different areas. It's still, you know, and actually, there are definitely challenges for the UK post-Brexit, but it hasn't led to, you know, a big, people were worried that talent would leave the UK. We've seen less of that. I mean, I won't sort of deep dive into immigration, but I think there's more we could do to think about how we can lead the world on regulation in a post-Brexit world around some of the newer technologies. So there's huge reasons to invest in the UK. And again, I come back to, you know, the perception outside the UK is better than within the UK. I think sometimes we just have to remind ourselves about what we're good at and then set the policies out to deliver it.
Thank you, Rain. I mean, the great question sits here from Jonathan Graham, which is about Europe, and a number of political commentators noted recently that the UK is looking to establish a closer relationship with the EU than it was immediately post-Brexit. Have you seen indications of this? And what are the positive, negative impacts of doing so? I mean, to say this is a political hot potato is the understatement of the day, but I mean, from an economic perspective, and a sort of practical real economy perspective, what are the CBI members saying? What are your views on that question, Rain?
So the EU remains our our largest market, and therefore it's in our own interest to have a close relationship with them and ensure that we're maximizing the most of the opportunities of trade with the EU. Now, look, I'm not going to go back to the referendum. There were huge, there are things that matter more for many people than, the straight economy itself. There's things like sovereignty, what kind of country do we want to live in, etc., etc. So it's not to say, even, and I do think, trying to, well, how would our economy be growing if we didn't have Brexit? Those questions become just less and less relevant, right? Because it's something that has happened. It's about what we do now around our growth and our overall strategy. And I think what businesses are saying, certainly in businesses in Northern Ireland, is look, we need a resolution around the Northern Ireland Protocol. We need to move forward from that. That is important for the EU to move forward in our wider trading relationship with them, but it's also important for the UK. I then think if we're thinking about regulation, when we talk, most businesses say they don't, because many of them, Europe is still the biggest market, and also in terms of international rule setting, Europe is a really important player. So we probably need to align on many areas of regulation, but where we have the opportunity to make the most of what I would call dynamic regulation, which is when new rules are being established in new markets, that's where the UK can really see opportunity. Now, there's a huge area around that, around financial services and Basel II and other areas around that, but there's also opportunity around AI and how regulation is established around that, and even around the green transition, right? The green taxonomy. The EU have gone down one route, which is very bureaucratic, very rigid, not very user-friendly. Now, the challenge is companies will probably have, most companies in the UK will probably have to report under that. But, can we come up, ideally we'd be able to report under a similar regime, but just have it much more agile, much more parsimonious, much simpler, right, for companies. So it's just one example, right? I think we could do better and learn from, use our second country mover advantage, right? And use the fact that we're a single country, right? As new medicines are developed, we should be able to approve them faster than 27 countries can.
Gosh, there's a question here, Rain. I remember nearly burning my parents' house down in the 1970s, not because I'm a pyromaniac, but because a candle fell over that I knocked over in a power cut. So this sounds absolutely horrific to me, but here we go. With industrial unrest growing and inflationary demands limiting Treasury flexibility, can we expect a repeat of the 1976 UK approach to the IMF? There you go. That's the question.
Well, a few things are important. One, we're not in a fixed exchange rate regime anymore, and that gives us a lot more flexibility. So I don't see the UK, needing to go to the IMF to bail us out in the same way we've had to see before. That said, we need a strategy around our growth and productivity. I'll come back to that. So yeah, I don't think, and the other thing to remember, right, relative to where we are in the 70s, the economy is so much less unionized, right? We had a whole spate of deregulation, of labor market flexibility during the 80s. And so that means that and you look at it now, right, the strikes we are seeing are concentrated in public services. And I think, there are real challenges. I think many of us have sympathy around nurses and what they went through during the pandemic. And it's, I think people have sympathy for some of the challenges that are going on. But I guess what I'm saying is while it's disruptive, it's, people have a range of emotions around it. It's probably less disruptive to the economy than what we saw in the 70s as well, because we have just a much, it is particularly focused around public services. And what's important is that we have a good way of funding our public services over the medium term.
Question from Sarah around there's lots of new office buildings going up in the city, and but we're all working from home, or are we? So is working from home generally good or generally bad? What's been the effect? the companies, and what do your members think, and what do you think about in respect to, has it had an impact on the economy?
So the view on productivity is generally mixed. If I go back to some of the academic literature, which generally a lot of, the big, was kind of pre-pandemic, it generally tends to, so having the ability to work from home generally can improve so it can improve productivity and certainly individual well-being at work. But there is a balance, right? And this is where it means, no one wants to go back to where we were during the pandemic, where everyone had to work from home, because essentially we had a constraint imposed upon us. Choice was taken away from us as businesses and us as individuals. And that means you're always going to have a suboptimal outcome. But I think a total free-for-all is challenging for businesses. What I can tell you from where businesses are ending up is the vast majority, and this is of office-based work. So I'm talking about that 40% of the economy where it's relatively easy to work from home. Of those companies, the vast majority are settling on a 2 or 3 days in the office. I think what I do reflect over the pandemic is there was a huge amount of digital adoption, right? Which definitely improves some of the productivity. I can meet with all of you quite easily virtually. We can have a discussion. It's not as fun, as engaging as if we were in the same room, but hopefully you're able to get a lot of content in a very time efficient way. So there's definitely productivity gains. I think what is true and what is more challenging for individuals is thinking about how we have good progression in a hybrid world. People haven't really got their heads around. How do you have good training? How do you make sure that young people are still getting the same opportunities for progression? Because some of the academic literature shows that while individuals may be more productive at home, they're less likely to get promoted. Now that, I think, is using more traditional ways of, I need to see you to know you to promote you. I think we need to be more creative, particularly as we have a lot of global companies who are very good at this, who have many teams working across different countries. So I think the genie isn't going back in the bottle. Hybrid working is here to stay. I just think it's a spectrum, and companies have to, decide what is the nature of their work and which tasks are most critical to be in person and to come together, and where is it quite efficient to give individuals the flexibility that helps, improve their own productivity, but also their wider well-being. And generally, there's a sort of happy medium, I think, on both sides.
Yeah. I mean, it's interesting if you look at, like an operation like the one I work in. Those of us who work on trade on the floor, go and see underwriters. That activity level is right up to a sort of 5 days a week type sort of basis. Those who look after clients or those who have back jobs, maybe 2 days a week. It's hugely varying. I mean, we're sort of that model that you sketched out. We've sort of emerged into operating in that way. I'm going to open up to the floor. So if anybody has any questions from the floor, I'm slightly flying blind here because I'm on an iPad and I can't see everybody. So if anybody's got a question they would like to raise their hand and ask, then please go ahead. We got anybody there, Stephen?
I can have a go. Well, I don't see any immediate hands up, but I can have a quick look through some of the questions, see if there's others that we haven't touched on.
There is a question in there about digital currencies just come in the chat box. Oh,
I'm so glad I opened up.
Peter Croucher has his hand up, Stephen.
Yeah, I can see. Let me try. I can see Peter has his hand. Let me answer the question on digital currencies as best I can. And I sort of feel, as an economist, you've got to have, the right humility. And I feel that there may be other experts in the room who are better able to answer. I think what I can say is, obviously, we've seen there was definitely a bubble in some of these cryptocurrencies. We've seen some of that first. I think so there is certainly scope from blockchain and some of those technologies to be applied and be useful in certain areas of financial services. But I think this idea that digital currencies are going to completely replace what I will call, they're not really physical currencies anymore, right? It's tapping your card. Traditional, if we want to call them traditional payments mechanisms or traditional central bank currencies, I don't think that's going to be replaced anytime soon. But I think not really a cryptocurrency but digital payment methods are here to stay. Cash is a dwindling currency, but I think we still see traditional central bank backed currencies, even if they are generally a Visa payment system, for example, are kind of here to stay.
Okay. Peter, you have a question. Do you want to unmute yourself and ask?
Can you hear me?
I can.
Yeah, we can.
Just a question that's been bugging me for a little while. The politicians keep repeating that we're the fifth wealthiest economy in the world, and I don't believe that, because it doesn't seem like it. Do you have any views on where we stand in terms of international prosperity?
Well, a few things. I haven't looked at the numbers in a while. I'm not sure if we're still fifth. We may have slipped down to sixth. But I think what you can say and where, so stepping back, there's been a challenge in advanced economies in the US and Canada. This stagnation, the great stagnation has happened in terms of productivity growth, has happened in countries apart from the UK in recent years. But what we do know is both the recovery from the pandemic and also our recovery since the global financial crisis, like our growth and productivity has generally fallen behind other, some of the other G7 countries. I think I haven't looked, but I did see a chart which looked at overall standards of living in the G7 countries, particularly say the US, Canada, and the UK. And if you look at that over the past 10 years, we've fallen behind. And there's also a challenge in the UK around inequality. So it can sort of not, and I think there's also, we're a small island, which means some of the pressure on our public services is maybe more acute. But I am also Canadian, and if when I was there in the summer, pressures on the NHS, the equivalent, we can't find enough people to grow our business. We're really worried about high inflation. These were all the very similar concerns. So I think we're not unique in some of the challenges we're facing, but they're maybe more acute. And I think the other reality is that both the run-up to the referendum in the UK and the post-Brexit period has had an impact on business investment because it created a lot of uncertainty. And that has had an impact on our growth and productivity. Now we can address that if we have, it's about what policies we pursue now, and I think we can work on it. But it is true, I think our standards of living have fallen behind relative to some of the G7 countries, but I don't think that's true if you compare it with, say, Italy, for example.
Okay, thank you.
Any more questions?
You have no more hands up, Nick.
Okay, well, look, I think we are coming up to time. So, Rain, I'm going to say on behalf of the Worshipful Company of Insurers, thank you so much for your time today. This has been a genuinely fascinating conversation, and to hear you talk about so many important issues. So we're very grateful. Thank you very much indeed. And I hope that we can see you soon. And I will now hand over to Stephen to close the meeting. Thank you.
Thank you. It's been my pleasure.
Thank you very much, Nick. I'd just like to add my thanks as well to Rain, to her PA for helping us with this, to Nick, To our clerk, Victoria, who beavers away in the background, making all this work for us, and to the members of the working group for their great ideas and fantastic debate that sits behind these selecting. So thank you to all of those. Thank you for your participation, your questions. Hopefully we've given you some food for thought. We are